Hey, good afternoon, everybody. This is Chris Torrence over at Optum for another episode of the semi-related podcast. So, as always, appreciate everyone tuning in. And if you ever have feedback from myself or the company, please be sure to let us know. The last few weeks I've had a couple firsts for our podcast, which, in full transparency, hasn't been going on for too terribly long, but we do enjoy it. And I think it was a few weeks ago I had my first ex-NFL player on the podcast. So Desmond Des Clark. And that was really cool. And that conversation turned into kind of going way down onto the gridiron, which was awesome. And today, which I just found out not long ago, our guest and I actually have quite a bit of history, whether we knew it or not. So about, we'll call it 10, about 20, we'll call it 20-ish years ago. Our next guest, Tim Denoyer, who's the VP and Senior Analyst over at ACT Research. Tim and I actually went to college together at James Madison University over in Harrisonburg, Virginia. So I think it's been at least that long since we've probably talked, and rightly so. But such a small world and getting us come full circle here in our industry. So yeah, Tim, welcome to the show, man. How are you doing?
It's great to see you again, Chris. It's been a long time. Thank you for having me. I had sort of, forgotten we were friends of friends too, but, there were some hazy days back then, but, great hanging out with you back at JMU way back in the day.
Yeah, I was telling Tim off camera, we could probably meet up for a beer at some point. And I know you're in Indy, right, Tim?
That's right.
Yeah.
Columbus, Indiana, but yeah.
Got it. And I'm up in the Chicago area, so not too terribly far. Definitely a few miles away west of Harrisonburg. So yeah, again, I'm just sitting here still processing. I'm like, I think I've seen Tim at a Sigma Chi party. Where does that name and face? And you haven't really aged much, man, unlike myself. So I don't know what's your secret, but keep it up, man.
Well, thank you. Appreciate it.
Well, cool. Well, Tim, look, I obviously I kind of know where you're, at least on some level. I know we're from collegiate style, but kind of give us a little overview about yourself, maybe, and kind of, we're both in this trucking, logistics, transportation space. Going back to college, I didn't think at JMU that I would ever be in this space. If you had asked me 20 whatever odd years ago, will you be working in the logistics space or the tech side of anything supply chain related? I'd probably be like, what? Here we are, though. So, and I don't know if your story is any similar, but yeah, Tim, give us, like I said, maybe a little bit about yourself first. Then I definitely want to spend some time on ACT, namely on how a lot of what you guys are working on are impacting the industry, and a lot of relevant topics we'll get into later. But yeah, Tim, welcome, and give us a little background.
Sure. Yeah. So after we we're having fun at James Madison, I went to New York and actually graduated in just after 9/11, and it was sort of a challenging time to go to New York, and decided to stick with that goal, and spent my first 15 years or so in my career in finance, doing equity research primarily for investment banks, but also for a few hedge funds. And that's where I got to know ACT Research, and back then it was called ACT. We do try to use the term ACT now.
ACT, we'll say ACT, yes. So many acronyms, but ACT, yeah. I like ACT. Yeah, we can do that.
A little smoother, I guess, but ACT Research. So we. I was a customer for a long time when I was doing equity research, and I was covering the transportation industry, and I was tasked to cover the trucking industry, to cover the manufacturers, a number of different parts of the industrial sector during that time in my career. So that was how I was introduced to it. The data side of it always fascinated me, and it made good sense for me to when I was looking for a transition after having kids and wanting to spend more time with my family. About 7 years ago, I moved out from the East Coast to Indiana to my wife actually happened to grow up out here, about 20 minutes away from where ACT Research is headquartered. So that was
all right.
That's
what brought me to Chicago, man. A happy wife, happy life. Just stay the course. That's why I'm up here from Virginia, right? So I can relate.
So it's a great fit for me. The kids are thriving, and so I'm happy from a personal and professional perspective. And we are in a really great position here. We advise lots of different people from different facets of the industry, and ACT Research really has a lot of insights, from the manufacturers, from different types of fleets, from different types of logistics companies. We talked to a lot of shippers, et cetera, et cetera. Mm-hmm. Kind of all the perspectives of the industry is what we sort of look for.
Got it. So ACT gets started I think I saw circa 1986, give or take. You've been there, it sounds like 7 years, Tim, and plenty of time to kind of get a thorough understanding of not only ACT research, but just the broader industry at large. So, what for those that may not know ACT as much, like what does this team look like? I mean, can you give us some stats around the team, the size, the scope? And you kind of have on some levels, but and then secondary to that, like I guess we can get into kind of some of the data points. You mentioned a ton of data. Obviously, that's the new gold, right? It's
Yeah.
certainly invaluable. So maybe how you guys kind of lean on the data aspect of it, and maybe there's other providers in the space or other research organizations. Maybe kind of give us some little delineation or differentiation of how ACT research. Maybe what is your claim in the marketplace today?
Yeah, that's a great question. And so we're a relatively small shop, and we're just under 20 people,
Okay.
and several senior analysts, some very seasoned analysts, a lot of veteran people who've been around for a long time, and uh, really great industry experience from the manufacturing side. We've got a number of people from Cummins and Eaton and places like that, and basically the data that the company started with was really just collecting manufacturers' monthly orders, sales, inventories, production, all the marketing data to understand what's happening with truck manufacturing. We really specialize in classes 5 through 8.
Okay.
We publish all the data on all of that every month, and by manufacturer, and we also have a really strong used truck product. We have about, I think, something like over 900 dealership rooftops represented in our
Well.
used truck data. We have actual transaction data where a lot of the used truck data that you'll see in the market is just list prices, which isn't very meaningful.
Yeah.
And so we're getting it from the dealerships, and so those relationships are really important. And we use a lot of our other relationships to sort of synthesize and forecast. And on the freight side, a couple of our key relationships are with DAT and CAS,
Mm-hmm.
and those are really good data providers. And I read the CAS report for the past few years. There's a monthly freight index that goes out that's me. So
Okay.
uh, and we love our partnership with DAT in terms of understanding what's happening in the spot market. We think understanding spot data is really key for just understanding the direction of the industry. So I spend a lot of my time in DAT data.
There you go. Yeah, DAT, no stranger to anyone probably tuning in that has even an inkling of experience in this space. So, Tim, is it safe to say that we're going to kind of talk about the market? Your lens is probably through more the equipment side. Is that safe to say?
Definitely, yeah. The
Okay.
equipment that's our specialty, and the rules coming up on the equipment side are
Yeah.
another place where I've spent a lot of my time over the past few years. We've certainly been critiquing, and I wouldn't say helping to write these regulations, but we've been part of the process.
Awesome. Well, the regulatory side is certainly no stranger either to for better or worse, right? I think we all, whether you're on the ATA, TCA side or the independent guys, the brokerages, many trade orgs that have their own differing opinions on where trucking should go. But for context today, Kim, we'll try to keep it through that again, that the equipment lens that you speak of. And kind of on that note, there whether you're watching Freight Waves and Craig Fuller and kind of hearing other thought leaders and called pundits, there's a lot of opinions being floated out there. But what are when you talk about current trends in fleet management and equipment utilization usage, the aging fleets that we're talking about, the investment in new technologies, where do you see? And again, there's this constant pendulum between private fleets, for hire fleets, and then all the above. So, kind of, what are some big trends that you're seeing right now that maybe the audience would say, "Hey, that's a piece of insight I hadn't thought about," at least from your perspective?
Yeah, that's a great question, and the private fleet piece of it is a very important. What I would say is I see a lot of people really grasping for explanations as to why this down cycle has dragged on for so long.
Yeah.
And what might turn things around, of course, is part of that question. But unfortunately, I don't have maybe not the best news. I mean, it's getting a little bit better, but in my opinion, the main thing that has dragged on this downturn has just been overcapacity. And one of the reasons that we have continued to add capacity even into this year from an equipment perspective is the rules that are coming up in 2027, which are
Hmm.
going to raise the costs of a Class 8 tractor sleeper by probably about $25,000 to $30,000.
Yeah.
So fleets are planning ahead of that. Reasonably so. It seems irrational when you look at the current market, but when you think about the longer term, and we're talking about matching assets that are going to last a decade plus, in a lot of cases, um, it does make some sense. Now, it is resulting in a lot of private fleet growth where we don't have a lot of freight growth. Um,
Yeah.
so instead of saying, I think it's maybe owner operators who are hanging on longer. That's the reason that it's dragging on. I think it's this pre-buy, and there's a pre-buy going on ahead of the 2027 emissions regulations. Class 8 truck production is going to be a little bit lower in the second half than the first half of this year. And there was one of the manufacturers had a call just earlier today discussing,
Hmm.
and but still, we're going to have a very big year for overall truck manufacturing. And even as like the vocational side of the industry builds as many as they can, and tractors have started to come down. They had a record year last year, but this year will be down a good bit. But still not down enough from a freight market perspective. We're still adding to the fleet this year a little bit, and that doesn't really help the for hire cycle to recover.
Yeah, I mean this has got to be the topic of topics is when will this deflationary freight recession, we're dragging along the bottom. I think everyone I talk to in my circles, whether you're on the brokerage side, 3PLs, asset players, and this is just across modes, but trucking seems to be the focus. I think everyone's just looking for some signs of hope, and I think we have some seasonality that often is kind of creates some kind of uptick, but it's often, as we've seen, at least to date, fairly short lived and just an anomaly of sorts that kind of goes along with historical data we're seeing. So, yeah, I think, again, I talk to the folks I speak with. I mean, it's just amazing how much COVID, contrary to what my initial thoughts were of what would happen in this industry relative to just consumer behaviors, et cetera, and then seeing that just that uptick, historically speaking, then the inevitable, the cliff, right? So
Yeah.
I think I think you're on the right track. I think there's a lot of differing opinions when you go back to the owner ops. Tim, I wanted to kind of ask, and with your finance background, there's a lot of rumblings, and depending on who I talk to, depends on how much they really want to acknowledge it or even dispel the rumor, perhaps. But there's a big notion out there why capacity hasn't exited the market traditionally in the way we've seen in other cycles. A lot of factors, like you said, a lot of regulatory issues. Do you also feel that there are some, these are not obviously cheap assets? Do you think a lot of the owner operators slash small fleets, and I mean, we're talking the vast majority of the market operating under 10, 6 trucks or less, owner ops obviously a big part of that they've gone out there and taking loans out for this equipment, and their loans were structured in a certain way. What wasn't known at the time was that the market was going to just fall apart. And there's a lot of chatter now about how the loans themselves are being restructured because there's been a huge amount of default on the loans for the tractor, the various class 5 through 8, I'll say 8 namely, and then the trailers, of course. And that if you're not having to make those payments as an owner operator, then you can really, basically undercut even what we would consider historically low line haul rates in the market, because anything that you make on top of that is effectively profit or goes into some other aspect other than repaying that loan. And the idea is that the banks have restructured to a point where when the uptick in the market eventually occurs, that's when the trigger points will happen for those, the payments and the loans to start taking shape. Have you heard anything along those lines, or is this just a conspiracy or just hearsay? Any truth from where you're sitting?
Well, there's definitely some truth. So there's definitely a lot of low cost financing given to this industry
Yeah.
during the pandemic that typically doesn't happen. So there's
Yeah.
definitely some truth there. There's also just the general idea that the industry, and owner operators made more money than they ever had before, and so the balance sheet coming into this downturn was stronger. So those are and that industry balance sheet, we measure it from a public company perspective, and it's still relatively strong. It's still stronger than it has been even today, where margins are now at 15-year lows, 14-year lows right now. The industry balance sheet hasn't, they've managed it relatively conservatively from a public company perspective, even though there's been some acquisitions. But the leverage is still pretty low. And so I think, I think maybe it does probably get overblown a little bit because, again, I almost think it's the wrong question in that, like the premise is that everyone's hanging in longer. But if you look at the operating authorities, we've never seen this type of exodus before. So I don't actually think people are holding in quite, at, better, or, we've seen something like 40 plus thousand operating authorities exit over the past
Yeah.
18 months or so. And so, so those exits tell you that it really is painful for those fleets.
Yeah.
And there's probably some temporary forbearance. There were definitely a lot of bad decisions made on used trucks during the worst part of the pandemic supply chain crisis. We saw people paying prices that were above new truck prices for like 4-year-old trucks.
Yeah.
It was just, decisions that were just obviously going to blow up at some point. Now, I don't know how many of those are out there, and and yes, I understand why those bankers would want to let those guys just keep running.
Ride it out. Yeah. What's the point of repossessing an asset that's worth considerably less than when you, obviously, as you noted, than when it was purchased, and then understanding market dynamics of I'm not going to see that, so let's just restructure the entire loan, right? So, no, I think everything you just said, all the above makes sense. And with your background as an analyst and a researcher, and of course the finance side of that, I just always just very keen to get the opinions of folks like yourself. So, Tim, kind of switching gears, we talk about how equipment impacts or affects those connections into operational changes that take place, right? So when you talk about the aging aspect of these fleets, you mentioned earlier that during the COVID era, people were paying above sticker price for used equipment. Obviously, that is definitely a different story today.
Yeah.
But when you talk about like let's kind of shift to the trailers. Has there been any similar trends that you can see on how that shifted over the years from the heyday of the freight boom of COVID to this bottom cycle we're on now? Any thoughts to share on that, on the trailer piece?
Well, yeah, trailers have become much more available as well. We
Yeah.
follow the trailer sector, and it's, the outlook for trailers is unfortunately pretty rough at the moment because,
Yeah.
you do have some fields full of unsold trailers, out in the Midwest these days, and
I'll confirm that.
they're not too hard to find. Yeah,
Yeah. True story.
it's really interesting how it's gone from that super tight environment of a couple of years ago where we couldn't find capacity. And I think warehousing is actually an interesting piece of the trailer puzzle right now because back then warehousing capacity was extremely tight as well. And trailers were essentially being used as mobile warehousing.
Yep.
And now that has eased, and also the whole idea of power only brokerage and that being just an ongoing long-term growth engine for a lot of companies, that seems to have really changed quite a bit. There was a thought that the trailer to tractor ratio should be going up over time as a result of that, but that's certainly reversed. And at the moment, the CapEx budgets for the industry really are being taken up by tractors, and so that's not really helpful for the trailer side of the industry. And they, I think there's the supply chain. I mean, there's always some issues on the supply chain side, but I think their supply chain issues have certainly gotten better, and now they're really just trying to manage that production a little bit downwards. And we've been we're expecting trailer production to come down a good bit, in the near term.
It kind of ties into another topic, and you kind of touched on it on the drop and hook, the trailer pool models. A lot of the technology folks I speak with again in my circles are, there's a lot of companies now pushing for this, this idea that to be truly efficient, you've got to get rid of what we would deem as, the live load, unload, dwell times, detention, all the things that people deem as kind of just these bottlenecks that occur that prohibit equipment utilization metrics from really reaching their potential.
Yeah.
So trailer pool optimization, not necessarily a new concept, extremely difficult to execute at scale. Yeah. But a lot of companies, from the manufacturers of the trailers to tech vendors that are just making that their model, I've seen a big push towards that. Tim, do you think that there's merit to this idea? Do you see a future trucking landscape where we kind of do shift to more of drop and hook networks? So we're kind of, to your point, the power only movements are happening at local and regional levels. When I worked at Uber, when the freight game kind of came back, there's this idea of these transfer hubs. The idea at the time was autonomous vehicles would have achieved L4 and L5 autonomy, and you basically just the autonomous vehicle takes it across the OTR corridors, and hey, everybody's happy. And the more constrained, densely populated metro areas, like let's keep the human in the loop for that, but yet allow those folks to get home for dinner every night. There's a lot of discussion on that because the driver dynamic, the demographic, the preferences, all that's changed. So
Mhm.
going back to this notion of do you see a fluid trailer pool? You look at a map and you're like, all these trailers are moving around, getting repositioned for all types of reasons. Is
Well, yeah, I do. I do. I think. I mean, the autonomy side of it, obviously.
We'll take that off the equation. It might be a little while, right?
Yeah, and yeah, maybe at some point. How about
Yeah,
let's leave that there? But from a today perspective, the place where I find trailer pool optimization really interesting is with everything that's happening on the private fleet side of the market.
yeah,
So private fleets, for better or worse, are continuing to add capacity,
yeah,
and that capacity needs to be put to work, and it's inherently less efficient than the for hire market because for hire fleets tend to run 85, 90% loaded,
yeah.
versus one way operation, which is
Right.
private operation 50. But I mean, private fleets, I think generally are okay at finding backhauls, but it's not a new prospect for them, but I don't think they want to make the investments in equipment. And I do think that private fleets are increasingly getting involved in the truckload spot market in order to try to offset some of the elevated costs. Because if you're running, half as many miles, or not 60% as many miles, then your costs are going to be considerably higher than the for hire market. So I think they're trying to defray those costs, and we are seeing. One of the most interesting things that happened over the past few months, and it was certainly not helpful for the for hire market in general, was the first quarter of this year we saw capacity leaving the spot market. Second quarter of this year, capacity came back. Most of the brokers we spoke with kind of said, "Yeah, that was private fleets."
Private fleets. Yeah. I mean, we know it's a tremendous amount of capex to run a trucking company, and again, I think that comes as no surprise. It's margins have never been slimmer than they are now, and even when the markets are favorable, it's still not exactly an attractive investment market, right? Trucking is traditionally speaking, right? So I think you probably would have some good data points to back that up. So I think do you see, Tim, because of some of those factors? Do you see more of a trend towards even if you're coming to market as an asset-based company, whether you're for hire, dedicated, could even be a private fleet, just due to the tremendous amount of cost, the regulations, the cost of even the human factor with the driver, got to recruit, train, retain. There's just so much other costs. I feel like the investor community looks at more of the asset light model as still more favorable. From your lens, do you see a trend in one direction or another? I know you've already called out a few data points that I think are important for this conversation, but I'd be interested from put on your finance hat. Do you see a future where there's just more consolidation amongst the assets, and that just kind of causes the market to recalibrate in terms of just the overall number of MC and authorities out there? Or do you see, maybe I'm just trying to figure out what is the breaking point of owning assets to where or looking at the broader long tail of the market going, let these smaller fleets kind of take on the capital expenditure associated with that, and then just have intermediaries kind of basically orchestrate all the loads and the driver assignments, the matching, the planning. Any thoughts on all that? I'm trying to get a better picture where you feel it's going.
No, it's a great question. I think the truckload market is so diverse
Yeah,
that there are some interesting long term trends. In the short term, it's certainly going towards private fleets, and we've got this dedicated sort of push that's been happening over the past couple of years. In terms of the investment community, I think the one area where it stands out right now is LTL, because they have the
yeah,
network and then the assets that are really unique. When we get into the truckload market, it's one of the most competitive markets in the world,
yeah.
there are some fleets who do a great job of differentiating themselves despite that. But at the moment, we're hearing even really good fleets losing business to their customers who are just insourcing right now, which is a big challenge. So that providing that really good service is going to be key for those fleets. I think there is a chance for those big fleets to continue to get bigger and consolidate the industry. But I don't think this is an industry that you're going to see any major consolidation because the barriers to entry just I mean, they're going to go up with these regulations that are coming.
Yeah.
But they are, and these regulations are going to support used truck prices in the future. It's probably maybe not necessarily a great thing until they hit, but they will push those barriers to entry up, and that should longer term when we talk about 5 years out maybe. Could raise the consolidation of the industry, but I think it's going to remain a very competitive.
Yeah. No, I agree. I think you justify a lot of that. Tim, if you were like, and I get this from other people that are kind of outside of our industry, and they're like, got a little extra cash, would rather not pay Uncle Sam and heavy taxes, and say, what's another way I can kind of divest my own portfolio, and they kind of consider going into trucking. And you're kind of there's the adage of if you want to make to make a $2 million trucking company, you got to spend $4 million. That's kind of the joke, right?
You want to make a small fortune? Start with a large one. Yeah.
Well, what do you say to that young entrepreneur that may not have a ton of exposure, at least from my perspective or yours, that's thinking, hey, I want to go into trucking? Tim, what do you think what are some key takeaways that they should be fully made aware before they make that decision one way or another?
I mean, it's a great question because it is interesting. You sort of ask, and there's still good reasons for people to go into the business. I mean, there's even it's hard to see at these levels because spot rates aren't really conducive. And what these levels of spot rates are kind of telling you is you're probably not going to do great for these first couple of years.
Not a good time to start.
Eventually, things could get better. I mean, the rules that are coming up, this pre-buy that's going on could keep going. I can tell you that the cost economics say that it shouldn't, but that doesn't mean it won't. And if that persists into next year, then this long downturn could drag out even further. And so better be prepared for a rough period before things get better. It may not be, frankly, I mean, 2027 is the next time where we think truck production is going to be down significantly and capacity is going to tighten significantly from an OEM perspective. So we think there's going to be really strong truck demand ahead of that because of those cost increases I talked about earlier. So that's.
So what can companies do that are in the mix now, Tim? So that was the scenario where I'm thinking about going in. I think the answer is unequivocally not a good time to go into this industry, whether you're starting a asset or brokerage, unless you just have some really solid relationships, niche areas that you service. Great. But I think just generally speaking, probably not a good time. For those folks that are in the industry and just kind of like, again, trying to ride out this storm, what can they do? Whether that's just, we're already seeing some companies downsizing. We're seeing headcount reduction. We're seeing a huge amount of, from where I sit anyway, a lot of tech and automation start to coming in the operational components, just trying to lower OpEx, right?
Yeah.
Any other, again, from where you sit at the research side, what advice, if any good advice or any positive news, if I'm a trucking owner, what do you have for me? And how can I best, sustain this turbulence that seems to be never ending?
Yeah, I think the best thing I can say, I sort of made the point earlier, but it's sort of just the message is keep on trucking because what I said earlier was that your costs as a for-hire fleet, if you're providing that good service, your costs, you're doing that at something like, I don't know, 60 or 70% of the cost that the private fleet is pulling it in at. And they may think that there's some cost savings, but at the end of the day, it's hard to make that pencil out. And so that massive cost advantage that the for-hire market has is eventually going to pull freight back. And so we're going through this sort of regulatory turbulence, and it's hard to know exactly when that's going to end. And we do think that the big fleets are planning for more pre-buying over the next couple of years. And so it's going to be. I can also say that tractor demand in the short term is coming down because as you said at the beginning, one of the ways that one of the reasons that people do this is to avoid taxes. One reason that people buy trucks is to avoid those taxes.
Yeah.
So,
Call a spade. I mean, either way, you're paying Uncle Sam, just how you structure, right? So, um, cool. Well, Tim, what about like again? Appreciate that context and the feedback there. I think everyone's just looking for. Everyone tends to see things through their own lens. That's just human nature, and I think having someone on the like with ACT Research, you're just seeing it such an aggregate network and just meta type themes that you're seeing. When we kind of talk about technology, right? I've heard this. Is it AI? Is that what they call it? I think that's something like that.
might be something going on there. I don't
I've read a couple blips on it. Sounds like there may be a trending topic. I'm not sure, but Tim, putting your technologist hat on, whatever that means to you, and you got a finance background, right? So I know ultimately what it means. But what any trends you're seeing with companies and what types of technology could be on the hardware side, could be on the software, numerous applications out there. But when you're engaging with your own research, any other trends you're seeing of specific types of technology companies are leaning into hard these days?
That's a good question. We see so many different types because we see like the engineering side.
Yeah,
We have spent some time with a lot of these autonomy companies, and
sure.
those are at various stages. There's certainly I can't say I'm a transportation software expert. I know there's a lot of
No
great
worries.
solutions happening out there, and that I think that's I think I do know that a lot of our logistics customers are doing are very active on those technologies. In terms of the actual uses of AI, I mean, we certainly find it very useful from a day to day perspective, just on some of the very basic applications of it. But
Hmm.
um, frankly, I don't think it's very I yet.
Yeah, I would
from
agree.
from a actually like trying to use some of these algorithms, it's we prefer designing our own algorithms. But it's interesting to watch them. I think it's helpful and it's instructive to me to watch some of these things work and see how they get tripped up by weather and stuff like that. It's kind of embarrassing still.
It is. Yeah. Well, when companies go to act him, and again, I'm not expecting you to know like all the tech jargon and for obvious reasons, right? Not exactly the hat you wear on a day to day. But when you are engaged with the boardrooms of asset 3PLs brokers, what are they ask? I mean, they're asking you macro level trend questions of the market, probably first and foremost. But what are you like? What are again? It kind of ties back into some of the other questions. What are you walking away with? Going, hey, I'm hearing this no matter where. There'll be diverse answers to some extent, and no matter just based on subjectivity, et cetera. But what are you going back to like the trends that you're seeing and how we can apply maybe some technology? And again, I'm going to go to even on the hardware side, right? The drivers, we're looking at the safety components, nuclear verdicts. There's definitely a legal component to
Yeah.
all this. Premiums keep going up. Insurance, right? It's just getting out of control. The cybersecurity issues are nonstop. It seems like that's the big headline in the news. I saw
Yeah.
where transportation could be arguably one of the most exposed sectors for cyber hacking and ransomware. Kind of scary, right? You're involved in a lot of these discussions. Do you have any like just again, what message are you conveying to these leaders out there that are going, well, Tim, I've heard what's going on in the market. What can we do today to again sustain these headwinds? Is there anything that you see that just you're like, I would be remiss if I didn't tell you this is what I'm hearing amongst all the other leaders in the group?
Oh, absolutely. In terms of an equipment perspective, to start there,
Strictly to equipment, yeah, yeah.
I think you do need to be very focused on specing any new equipment with essentially all the latest safety gear. If you're a fleet manager who unchecks that box, which comes checked,
Right. That's the
um,
default setting. Yeah, yeah,
there's liability there.
yeah.
And so I think the insurance companies are starting to react more and more and starting to notice the difference between the trucks that have it and those that don't. And I think there's increasingly value in that for those fleets that are investing in it. It's just safety is obviously number one. We've had some interesting conversations just recently. I was actually on the DAT show just last week with talking to my buddy Dean Croak
Dean, yeah, yeah, yeah.
about speed limiters. And his view, as someone who knows more about this than me, is that speed limiters would actually hurt safety. And the conventional wisdom would tell you, well, if we reduce speeding, shouldn't that help safety? But no, if we do like 62 miles an hour, 65 miles an hour, like on roads today, that would be dangerous. It was his view.
Yeah.
And I
Did
think
you agree with that, or do you see it differently?
I was admittedly a little bit surprised to hear it because I was sort of thinking of like the conventional wisdom of like, oh, let's just, probably fewer accidents if we slow down. Um, and
Yeah.
I
I'm
think,
curious. Dean's been on our show for clarity. I don't believe we asked him that question,
yeah.
but again, you've been in recent discussions with him. What was his logic on why that is? I'd love to kind of hear more about it because I'm sure others are thinking, going back to your conventional wisdom, like that seems to defy what the assumptions would be.
Well, actually, maybe I'll use this as an opportunity to plug our upcoming seminar in August in Columbus,
Yeah.
Indiana, because I didn't really press him on it, but he's coming and presenting with me at our
Okay.
seminar. So just next month in Columbus, but
All right.
it's we actually have a whole bunch of great industry leaders from places like JB Hunt and Penske and Arrive and
Yeah.
a number of different places, and so we're very excited about getting together as an industry next month. I'll put that on my list of things to ask Dean. But I think it was basically just that if we slow trucks down, the speed that cars are going these days,
Yeah.
it'll be a lot more.
It's almost it's more hazardous to go to be deemed under the speed limit to a point where it creates potentially adverse effects of not going in the same flow and speed as standard personal vehicle traffic. So
Yeah,
I assume that's what he's onto, right? It's just
I think so. I think
yeah,
so.
yeah.
But we'll get more out of him soon, I'm sure.
Tim, how close are you with the regulatory side of all this? By the way, I mean, talk kind of again a little bit of a shift gear there, but
Yeah.
these regulations have a huge impact on just overall fleet management, the operational component, cost. There's market dynamics involved. Um, do you think we have the right legislative folks in line going from Buttigieg down? And I don't want to this is not a name calling or anything like that. Just more, do you think at the federal level, and I don't know how much exposure you have to FMCSA and just more go over on the Hill, and you have this, and you have lobbyists that have conflicting interests, and we know it gets messy. But going back to again the regulatory side of things,
Mhm.
what are you seeing on that end? And can we expect more harsh regulations? We obviously we're in a crazy election year. That's an understatement.
Yeah.
A lot of it just may be predicated on what things look like after November. But yeah, I just love to hear more about what are the couple key takeaways that folks need to be really paying attention to on the regulation side of things.
Yeah, so our work, the expertise that we have brought to the industry over the past few years, and we're on the record for, is primarily between the engine manufacturers and the EPA, as opposed to I
Ah,
don't get too much
yeah,
into
yeah.
the transportation policy side, but the emissions regulations are pretty significant, and there's two main rules that are in focus right now. One is called the EPA Clean Truck Rule,
Hmm.
I referred to earlier, that's going to raise the cost of trucks significantly in 2027. It's going to reduce NOx emissions further. And it's also going to extend out the warranty and useful life of the after treatment systems. So that's where a lot of the cost is. This one was actually initiated under the Trump administration.
Hmm.
It was probably the biggest question I get, going back to your question earlier, like from executives and from the industry right now is so what does the Chevron ruling from the Supreme Court mean for these rules? And we kind of think we don't know. Of course, we're not the legal side of this is actually really fascinating right now. I can't say I'm a lawyer, but as sort of an economist, we try to be as multidisciplinary as possible.
Sure.
The legal side of it does look just really fascinating because at least the clean truck rules are, I think, less likely to be challenged. I think these are going forward. They were made under the first Trump administration. They're expensive, but they're not anything the industry hasn't really dealt with. The second big rule that just went into effect earlier this year for heavy trucks is called GHG3. And we've had a series of GHG regulations over the past decade, which have generally been great for the industry. They have added a little bit of cost to the truck, but significantly improved fuel economy. And so those fuel economy savings have been great for. So the but we're running out of room in terms of the the runway of things that the industry could do to improve fuel economy at low cost has kind of run out.
Yeah, Tim, and on that note, like alternative fuels, I mean, we're obviously seeing electrification take a big place. Take autonomy out of it, just strictly for talking energy here.
Yeah.
The hydrogen fuel cells, there's renewable diesel, renewable natural gas. The OEMs obviously have a vested interest to make sure they're manufacturing this
Mhm.
equipment.
Yeah.
Where do you see the most like likely outcome? And maybe that's going to change from the next 3 years to 5 to 7 to a decade.
Yeah.
Any looking at all those potential avenues, is there any one horse in the race that you see really, ahead of the pack, at least right now? And do you anticipate that changing? And again, there's a lot of variables involved.
I think the answer to your last question is certainly yes. I think there's going to be changes, but I think what I would start the answer by saying is that it took a few decades for diesel to gain its dominance of the industry,
Yeah.
and so the changes will be pretty gradual. I think some technologies like natural gas have already made a good amount of
Hmm.
progress and are continuing to make progress. California has had a couple of rules go into effect this year, which are much like the national rules I talked about for 27. That's basically taking effect in California this year. You can meet those emission standards with natural gas really easily, and so that supports more of that. And a bunch of other states are going to be adopting those California standards over the next couple of years. So that does support natural gas. For sure, and there's ways to make that renewable and actually make it net negative for emissions, which is
Yeah.
pretty cool. But at the same time, that's been pretty nichey and a tough technology to make work wonderfully, and we do collect data on that. It's only I don't have the number quite off the top of my head, but probably 1 or 2% of Class 8 truck production. It's not huge.
Got it.
Now, when we look at the other contenders, it seems like electrification is sort of the next biggest at the moment, and probably if things are going to change, it seems like it's going to pull into the pole position. There is a significant battery plant, I think, planned to come online in 2027 by a joint venture of Daimler, Packard, and Cummins,
Hmm.
and that's going to give us relatively low cost battery production for the first time in the heavy duty market for North America. So we're still a little ways away from that, but that's where the investment's going. So that would be where my money is in terms of what's going to take the next step up. Now, is that really going to get us there in terms of the on highway tractor market? Mm-mm.
Yeah.
It's not quite. It's going to be further down the road, and that's actually coming back to GHG3, where the EPA is trying to force very significant zero emission vehicle adoption, starting with day cabs in 2028, and then sleepers in 2030, and so other lighter and medium duty vehicles are happening starting in 27. So that's a very big rule, and it's going to force some major changes and a lot of investments, and we're certainly not ready for it today. Whether or not we can get ready for it is an open question, but that's really where a lot of the investment is taking place, and seems like, especially with sort of medium duty and local applications, electric vehicles make some good sense. Anything longer haul, we need a better technology, something like
Yeah.
a solid state battery that will have the energy density to compete. So
So is that, Tim? I think you touched on a good point. When you're engaging with OEMs, right? Do you, on the manufacturing side, do you see them kind of taking that similar stance of, hey, we're going to be realistic here, right? We all got caught up in the EV wave, thanks to the Teslas, and I mean, I've lost count of how many companies at its peak were in the electrification / automation of trucking because the capital injections were just constant.
mhm.
Now we're seeing a lot of those companies are no longer on the same. If they're even still alive, you're seeing a reality check on just the sheer amount of capital it takes to even prove out these technologies with any level of scale. So, do you seeing the OEM saying, "Hey, let's just step back"? We do see if it's a local P&D stuff, small radiuses for travel, not a huge amount of charge that's required for electrification for those particular vehicles, and that in a more localized network. but you're seeing, if I'm hearing you correctly, a lot of these executives saying, "Hey, it's really hard for us to go all in on over the road. Massive amount of investment. I don't know if the technology, to your point earlier, if the batteries themselves, are we even on the right track, or is there a new technology that hasn't really been discovered that would make this a little more feasible?" So, I guess, is that the general consensus from what you're seeing in your conversations?
Yeah, I think that's exactly right. I think another way to say it is you don't see any electric tractor sleepers yet.
Right.
Yeah.
Yeah. Well, you see, there's a big push for it. And I think, again, it's like a lot of other initiatives. And I go back to where when times are good and everyone's making money, all these initiatives that are peripheral become in the forefront because there's money at hand to go in to make these investments. A lot of it's PR related, in my opinion. We're playing nicely, we're EPA friendly. Now the market's in a different position. So it's funny how from where I sit, a lot of those initiatives has kind of gone to the back burner. Now there's people on the inside of those organizations still keeping, a huge focus on that. But I think, again, just depending on market conditions, it definitely, in my experience of doing in this industry, it's always just the ebbs and flows of where people choose to go down these directions and when they choose to kind of back out and say, at the end of the day, let that diesel burn because we need to move freight and we're trying to keep the lights on. Is
Well,
that something, a hurdle that you often overcome as you're trying to provide research to these same companies?
yeah, for sure. Absolutely. I guess maybe to take a step back, I think it's interesting to point out that the trucking industry in the United States has never been held responsible for its emissions. Um,
Despite being what we produce, you probably know the stat. I mean, it's staggering
it's a
how
lot.
much, you go to supply chain, go to trucking in particular as a singular mode. It's incredible, our CO2 emission. Yeah.
So, if you want my opinion, there's lots of other ways to regulate the industry instead of just focusing on the OEMs. I mean,
Yeah. Yeah.
that's what we have because that's what the EPA is allowed to focus on that new truck sale. Um,
Can you elaborate on that, Tim? I'd love to hear, like, if you're sitting at you're at the head of the board of those boardroom meetings. What are some alternatives that we could be thinking differently instead of chasing the shiny new toy that gets the headlines?
Well, so there's a few different. I mean, there's a whole raft of policies we have problems with. But take the federal excise tax for one. I think it's a 12% tax on every brand new Class 8 tractor. It funds the Highway Trust Fund and has since actually it was initiated, I believe, for World War II, and I believe those bonds have been paid off for some time. Um, but of course, you can't take away revenue from the government, so it persists despite massive protests from the industry and penalizing the cleanest trucks on the road.
Right.
If you want to tax the industry and you want to do it in an environmentally friendly way, tax the old trucks. Put some sort of old truck high emissions surcharge out there. Like that would be one way to tax.
Yeah. Why
Also,
are we doing? Why is that not happening? Because I'm going back to just.
well, I
I
mean,
think that makes sense. It checks both boxes in a single swoop. And why is that not happening?
I can't say I'm a policy wonk. I just know that it's essentially it comes down to Washington in action. That these, I mean, like the industry's been lobbying for it for a long time and trying to get rid of federal excise tax. Another thing we would love in the industry is instead of doing that, why wouldn't you, like why don't we try to buy back old trucks that are more polluting like that would
Yeah.
help the industry and take down emissions of the old stuff. There's lots of different better ways we can do it, but I think at the end of the day, these are expensive things to ask for, and that's why they tend not to happen.
All things boil down to money, right? Like that's.
One of the ways we've criticized the government on the record in some of these rulemaking proposals is by pointing out that they want the industry to electrify. They're forcing the manufacturers to electrify, and yet even the Postal Service still bids out its freight on a lowest cost bidder and wouldn't pay for an electric truck.
Little hypocrisy there, right? I think the
So,
most polluted vehicle I see is the delivery guy on the mail truck. So never seen more diesel clouds come in the back of a vehicle than that, which just accentuates your point. It's like the irony of trying to mandate these things onto the private sector, but yet the U.S. Postal Service is, again, the biggest polluter of vehicles going down my own street, and I'm just trying to tie that and rationalize that in my own head. It's just
I will say that the U.S. Postal Service, I believe, has ordered something like 60,000 electric vehicles. So
yeah.
that bid's that been out there, and I believe I forget exactly how it breaks down between.
I think I heard that.
Some
Yeah.
will be gas powered still. I think some may be hybrid. I'm not sure, but a lot of them will be electric. So they're at least they're taking a step forward there.
Tim, I kind of want to talk about again more about ACT research. We know what can you ever? I'm trying to think of the right wording here. We know that there's an abundance of information and data, but it seems this industry has always had an issue with accessing data. And if you can access data, how accurate is it? And I'm
Mm.
looking at ACT research as kind of an aggregate of all this market level data. How do you guys kind of reconcile that? You may be pulling in data that is in direct contradiction to another data set that you would assume it's got to be, there's correlations maybe, but like, how do you guys, like, again, I would hate to be the guy that's kind of like, we're the research center, whether it's talking to Dean Croak or you guys, and understanding just that challenge of trying to, how do we even, if we're not really confident in the data sources we're pulling from, if we can even pull it, how do we even come up with some ideas that seem to be like we can stand by it? And how does ACT research overcome those barriers?
Yes, finding not to throw out a Lord of the Rings reference that my boss throws out the one ring to rule them
Yeah,
all, whatever it is. We do think our data in a number of different ways. Um, I guess first off, I am really lucky to have a couple of guys with a lot more experience than me, who I bounce stuff off of all the time,
sure.
and who have been through more cycles than me, and really have a good long term lens to look through. One of the things I find fascinating, and one of the ways I answer your question, because there is a lot of conflicting data that comes in all the time, is it really comes down to sample size.
Yeah.
Sample quality data, in my opinion, is almost all about sample size. One of the things that attracted me to ACT Research is that there's not that many OEMs. They all report to us,
Yeah.
all of them. So like, and I love data sets that gives you the entire market. Like, I love railroad data, even though it's maybe not a huge sector of freight. You can get every railroad every week,
Yeah. Yeah. Yeah.
and by segment, and we look at that because it's because we find that helpful from a continental perspective. We look at imports as well. It's another one where, again, it's not a huge percentage of freight, but it's very telling in terms of what's happening with the inventory cycle, what's happening with retailers, those types of things. So data sets that can tell you the whole market, or 95% plus of the market, which I think not many can.
Yeah.
There's a lot of stuff out there that gives you a smaller piece. I think the bigger picture is always better for me, and it's been helpful to see. The biggest example right now is as we compare just the broader macroeconomy to the CAS data. And one of the main questions I'm getting a lot from our clients is that difference right now, and it just sort of reinforces that private fleet pre-buy point that I've made at nauseam.
Yeah.
But we see the CAS numbers down quite a bit. And I do see some, commentary out there that just suggests that the freight market's weak. I don't think so. Freight market's growing. And I can point to imports. I can point to intermodal. I can point to our freight composite, which is a GDP-based metric of freight. I can point to retail sales. All those things are growing. Industrial production growing at a national level. The Fed Industrial Production Index was up 1.6% last month, or just last week for June. So not much, not a lot of growth.
It's incremental. Yeah, we'll take any
Saying
growth though, right? Yeah.
it's great, but when you try to explain what's going on with CAS numbers being down mid-single digits year over year, some of it's LTL specific, I think, because may have to still do with yellow a little bit,
Hmm.
but I think a big piece of the answer is that private fleet insourcing, and being able to sort of see that at that by sort of coordinating all of the different data is I think really helpful. And that's one of the things that sort of drew me to ACT Research was that all those relationships that are in place here, and all the trust that the industry has in us to basically be the historians on the truck data side.
Yeah. Well, taking and on that with the research piece there on the market analysis, how does that directly, if I'm a carrier, why, if I go with Act Research, I assume you're going to help me better plan, better strategies in place. Can you give us a flavor of kind of go, and you touched on, without going into numerical data, you touched on a lot of the pipes that you guys are connected into to come up with these more macro level economic forecasts, et cetera. But give me, is there a couple key takeaways that you would have for companies? And maybe it's just a plug for Act Research to go, hey, get with Tim. He can give you a whole session on this. So what's the hook for them? Like, how am I, can you give me like a tangible example of how companies go to Act Research? They have a myriad of things they're looking to improve on, or maybe it's just more informative and educational. But at some point, if I'm running an operation, I'm looking to say, what are the action items I can take away from this and implement?
Oh, absolutely. That's a great setup, and it will be a bit of a marketing pitch, of course. But yeah, we publish a number of reports each month, and one of the ones that a lot of fleets use is the freight forecast that I write.
Mm-hmm.
It does use the CAS data, the DAT data, and it forecasts all that out into the future. Truckload rates, LTL rates, intermodal rates, and volumes. Was there something like, I don't know? I think we're up to something like 40 different data series. All the DAT. The national data at this point. We're gonna add Canada pretty soon. I'm working on Canada, and that will be added to the report in the next few months. And one of the great outputs as well, by being plugged into the freight markets and the equipment markets, is to help fleets with their used truck prices and forecasting those, which is a big challenge for a lot of fleets. And so we do that work. And I have another something like 40 different forecast models working there. So that's for different types of ages and vintages of tractors, and even into medium duty. So we spend a lot of time with fleets, helping them plan short term and long term. We've got the near term forecast, but also the next 5 years.
Yeah. Do you think, going back again, there's the notion of like, owning assets versus the lease. So specifically around the trailer, right?
Yeah.
Tim, do you see the trend moving forward being more of people adopting more of a lease mindset, knowing that, hey, if it's under lease, I own, there's a certain level of responsibility I have on it, but overall, I'm not going to be, I don't have to carry this depreciating asset on my books for an infinite amount of time. Do you see in your engagements, and of course that directly impacts how the OEMs are going to manufacture quantities, where they distribute those assets. What trend do you see in that direction? Because I engage with people like, we're looking for growth. We're also looking to reduce CapEx. And to me, that's like, well, the only way to do that is maximize utilization, squeeze every every dime, every dollar out of every mile that you drive. You got to maximize that. And that's where technology, I think, is helping expose that. But then it leads to a more broader question of, should I even own the asset to begin with? Is it more cost effective for me to just like go to the open market and let them worry about it, and just like the broker mentality, which I see brokers now are also going down the leasing path, because the spot market's not exactly favorable. Every time they knock on the door of a shipper, the first question is, do you own assets? And they have as soon as you say no, right, we're non-asset based, you go right back to the end of the line. But I'm just wondering, do you see, even maybe within you mentioned Arrive and Robinson, maybe some other companies I've worked for, do you see the trend of them saying, maybe we're traditionally a broker, but maybe we should consider bringing on some form of a fleet that they can say, through leasing, maybe we still have assets we can allocate to the certain businesses that we service?
I do think that's been a huge trend over the past few years, but the way we see the trend shifting is actually going from trailer leasing more towards tractors, and
Interesting.
with
Okay.
those tractor prices going up, so
Yeah.
that makes leasing so much a lot more valuable there. Just given those big cost increases that are coming down the pipe, and there's always a good case for trailer leasing, and like we talked about earlier with with just trailer pool optimization, I definitely think that there's lots of opportunities in that space. But yeah, a lot of my intellectual energy ends up getting sucked into the tractor market.
Yeah. I mean, the tractors, I mean, it's a symbiotic relationship, obviously, the tractor and the trailers. I just try to get better. I'm trying to get more and more myself just for my own edification on from your lens. Like, I wouldn't have thought that, but maybe that's the future is you're actually leasing the power unit and maybe the trailer as well, or maybe it's a split type of model. But there sounds like there may be merit to that. There's a market for it, right? Everyone's just
Yeah.
but again, it goes back to utilization. I mean, I've got a lot of leaders that say, I'm not going to pay for a gym membership I don't use, and that same mindset applies with when they purchasing goes into these equipment. Make just the sheer amount of cost that goes into that. So I'm just curious. Maybe there's something there, and the OEMs could the OEMs do a better job of within the freight market, kind of. Or maybe they are, and I just don't see it. Do you see an opportunity for trucking executives and the OEM executives to spend more time having these types of discussions? And maybe they are. Maybe your conference that's coming up, that's exactly the type of discussions that'll be happening.
Actually, we have one of the OEMs coming as well. Yes, so we do almost always have one of the manufacturers come in and talk at our seminar, and I do think that's very important. And I think the good fleets are talking to their OEMs on a regular basis,
Yeah.
and the OEMs are definitely very communicative with their customers, and I think some of them do have good sized lease fleets.
Yeah,
So they're competing in that lease game too. Yeah.
for sure. Tim, I was also going to ask you about like, and again, I know I'll put it in the realm of like going back to that utilization. And again, I know you're not a tech guy per se, right? You mentioned that's definitely a factor though. What other areas, when those discussions are happening between the trucking community and the OEMs, there's a technology component here, but where do they see the biggest opportunities for, leveraging? Maybe it's through data that they're not seeing, maybe it's through the utilization metrics. Have they come to any common consensus that if we did X a little better, then that would solve maybe Y and Z, or anything along the lines of just more broader level discussions that are happening? That because that's the one thing we get. We're not as Optum's an optimization company. Like, how do we better utilize our human capital, our equipment, all that? And I just didn't know. And again, the OEMs may not care, right? They're like, hey, we're here to manufacture and sell you the equipment that you need to do your job effectively. But I'm always just trying to find is there more of a gold mine under our feet right now as an industry that we're just not seeing? And we think that every time the market goes, the frenzy, go buy more assets, go buy more equipment for a myriad of reasons. But a lot of time it's just short-term thinking of the good times will never end.
Yeah.
We're missing out on getting just historically positive, like great rates. And of course that ends and then they're underwater, as we've seen. So I'm just trying to get a consensus again from your conversations. And maybe it's just more of a data can acknowledge this and maybe validate it. What are the things that we could be doing today? You talked a lot about outlook around the legislative and regulatory side. We talked about EPA and environmental standards changing. We've talked about alternative fuels. But let's just pretend all that's not in the equation. What is are there a couple of key takeaways now that we could do a better job on?
Well, one thing that I think the OEMs are doing, and that I think, well, I can't say too much about the conversations I've had, but there's a lot of telematics data out there.
Yeah.
One opportunity in data and leveraging data better. For so far, it seems pretty immature, but I think there's a huge opportunity longer term to understand industry telematics at a bigger picture level and at a micro level. And I think that's where most of the value add will end up being on the micro level. But there's been a whole lot of telematics devices added, in the past many years, and now I do think there's more harvesting of the outputs, and I think that is a fascinating place of where there's more to do in terms of data analysis.
Do you think that OEMs, Tim, have an appetite? And again, I think this is probably already happening, but there's a lot of third-party vendors that sell hardware-related software, again, relative to telematics, visibility, you name it, right? Mm-hmm. Great data sources. Do you feel like, do you see the OEMs starting to have equipment come off the lines with all of this through partnerships pre-installed on the units as opposed to having to retrofit it? Is that something you're seeing a lot of now?
Yeah. I think in the past few years, it's been pretty industry standard that these trucks are coming with pretty good telematics packages, and I think I can't say which OEMs were
Yeah,
first.
yeah, no worries. Yeah.
I don't track it quite that closely, but I'd say over the past, say, 5 years or so, it's become pretty industry standard.
Okay.
So it's tough for other software providers to break into the OEMs. I think because I think they're. I mean, but at the same time, these are technologies that are probably still moving quite a bit. So I'm sure some technology providers are having success, but they're they're definitely starting to generate a lot of data. I can say that.
Yeah. Tim, I think we covered a lot of bases, man. I know I've had you for about an hour or so. Is there anything, what did we not touch on that from your perspective or ACT research that you think would be of value for the listeners today to kind of understand? And I think the challenge sometimes for me is I'm such a tech guy right now and a practitioner, and you are the research extraordinaire. I'm just trying to figure out how, what did we not cover today that you may think would be some good information for the audience before we let you go?
I think it's been a great conversation. I really do. I think we've covered, there's a lot. Even despite my lack of sort of, technological expertise, I think we covered, a lot of the key, questions in the industry today. I think, maybe I will plug our seminar one more time for those
Yeah,
listeners.
yeah, please.
Stopping by if you're anywhere near the Midwest. It's August 21st and 22nd.
And
And
what city is that being held? You said
It's Columbus, Indiana.
Columbus, Indiana. Okay, okay, good to know.
So
What can we expect though, Tim? Just like give us a little more context because there's so many conferences now. I go to quite a few myself. I think everyone's just intrigued to learn more. But when you've got, there used to be only a handful, and now it's like literally you could have conference. It's not a season anymore; it's all year. What is the, how does this event kind of separate itself from some of the others? Maybe it's the OEM component.
it is. It is. I would say if you want to understand supply better,
Yeah,
that's who's going to be there is the people we've been talking about, and it's not a huge conference, but it's a great group of market intelligence folks in general, who are really good networkers and happy to share. And I think I remember the first one that I went to, a long time ago. Still talk to some of those people today,
yeah.
and so it's. I think it is a very valuable equipment focused, couple of days, and it's. I guess how would I describe it? It's very sort of family like.
Yeah.
It's
More intimate environment. Doesn't feel like a mass, World Congress Center type convention. It's a little more apt for good discussion.
we have people over to our office afterwards for like a barbecue. So
Oh, cool. Got to have a little fun, right? Got to have a
yeah.
little fun. Well, cool. Well, Tim, how can people reach you directly? What's the best way?
Well, our website's actresearch.net. You can find me on LinkedIn. You can see me on DAT on a regular basis. You can if you want to read my thoughts about the freight market on a monthly basis, you can find that on CAS, the
Okay.
CAS Transportation Index. So there's a number of different ways, but yeah, you can always inquire on the website.
Outstanding. Outstanding. Well, Tim, I'll go bring it full circle again. Good seeing you. Can't believe I probably had a little more hair and looked a little different last time. I'm sure of Tim. The more I'm looking at you and talking to you, I'm like, I know we've been at a Sigma Chi event and I know Tim's been staying there. We've probably talked, but again, for
I know.
me, just on a side note, I'm like, this is surreal in a way.
First time I saw your face, my jaw kind of dropped, and I was like, "Wait, I know that
Hair.
guy."
Yeah. Skinnier, more hair, no beard, all the things that college age would indicate. Well, cool, man. Well, I will. I don't know what my schedule looks like to date yet. I know it's coming up the event you mentioned here in about a month or so, a little less.
Yeah.
So I will certainly try to see if we can send some representation down there because I try to be a lifelong learner, and this has been very educational for me because I don't see. I think that's this industry as a whole, Tim. I think can do a better job of perspective is everything. And I think we get so caught up in our own lens and our own inherent bias of just our day to day that we fail to really open up that round table and bring in more thought and perspective. And I think this event coming up could be a really good opportunity for people to see it from, again, the manufacturing, the OEM side, which often is just kind of an assumption for those of us in the industry that say, oh, it's another department. They worry about that, right? So
Definitely an opportunity for people to get a little smarter.
yeah, it sounds like a value prop in its own right. So, with that, Tim, thanks again, man, for joining us today. And yeah, thanks for everybody for tuning in. Tim Denoyer has given you some ideas on how to reach him, and hope everybody's able to at least check out this the event they got coming up in about a month there down in Indiana. So, with that, Tim, again, thanks again.